The MBI.com. This is John's report. Is for the 7th of October. The excitement that bulls were having sort of faded pretty quick. No surprise with that. Uh, MBI Red is still leading the magenta, and as long as that's the case, you get this back and forth. And it's something we talked about. As soon as magenta fades, it's going to really create a downdraft in that case. And we're also seeing pretty significant rise in the MBI white here now into the mid 36 range. Um, so it's problematic with the orange rising on the DOC. We did not maintain the crossover of green over cyan, so that's where shorts you can see kind of flattened out a bit here. And if they begin to pop up, that could be problematic. The shakeout's still moving in the right direction, but this could begin the turn. If it turns before we get positive, then we're definitely going back to the zero, and that wouldn't be a surprise. I mean, we knew that this was just a short cover rally taking place inside of a broader bear move, and it's kind of normal that people get really excited by the moves. But there's a, a lot of issues out there, and of course, the market believes the Fed is going to do something the Fed keeps saying it's not going to do, and we hear the comments from the different Fed governors saying that no, they don't expect any rate cuts in 23 at all. And all we have to do is look at the bond market to see what they believe, and we'll see that one in TLT in a minute. This caused obviously a massive decay in the euro, not to mention the fact that, again, we've talked about this as oil rises, fewer euros are really desirable as they're going to have to find uh, greenbacks in order to pay for ever rising fuel costs. And the situation for Europe is bleak for the winter, and there's just no way out of it at this particular stage. So it's quite problematic. As I was pointing out, TLT again moving lower, which means rates are climbing, and that's the bond market saying they believe what the Fed is telling them and aren't ignoring it, and that should frighten everyone because at the end of the day, the Fed. At a certain point, needs demand to be crushed for oil in order to help drive it down, which is why you saw OPEC decide to align with Russia and say, hey, you're not going to do it on our back. We're going to cut production relative to the demand decrease. And that's exactly what they did by a couple million barrels a day. And that's really just going to put upside pressure on oil. In this particular case, that's also, I think, going to add to the gold case. So we can look for that to continue. 55 of the magenta. Uh, Interesting thing about that is what I'm looking for would be a turn down in the white MBI reading before magenta, and that way magenta will still maintain its lead over. If that works out that way, then we would definitely see a continued breakout for gold. If it doesn't, then it's going to look an awful lot like the market. And so this is what oil's doing because of OPEC's move. And again, like I pointed out, when you get towards that 90, it becomes problematic. And of course, then, the administration announced they were going to release more from the strategic reserve. But at a certain point, it becomes not a strategic reserve if you don't have anything left. So there's that issue that will have to be figured out because what do you do if you don't have anything and you have a strategic issue that you need it and it's not there? Bitcoin, again, not a whole lot of movement despite these market gyrations, which I think is showing a bit of stability within this area. Now you have that MBI magenta leading, so the potential for it to continue to move higher is still there. Shorts seem to have activated a bit inside of it. Um, so I think it's still going to be a back and forth situation, but not a negative. And from an ETH standpoint, a bit weaker, and it's been a little bit softer than Bitcoin in general, close to its 0%, and it still has the MBI weight leading, so that's a negative draw on it right there. And that turn above orange, again, you get this situation where orange caught between the cyan and the red is a continuation pattern. In this particular case, while it's been lower, it's mostly been sideways. So literally, we've gotten a continuation of the sideways action on it, and it's relatively equal to what we're seeing from Bitcoin. From an ES standpoint, I had marked positive extremes at various key points right here. This was that previous dip, and looks like we're headed right back towards that 37.33, which would be that next positive extreme level, and then further down we end up with the 36.90 range. And then when we go to intraday, there was a bunch of them that we had marked from before, and actually I have to scroll back for the day because the market was just active. So I was following the day's action, and it was quite active. So here we had moved back and filled a couple of other positive extremes. There were still these couple others that I was pointing out that still needed to be filled, and of course that took place in the pre-market hours. Then we caught a bit of a bid coming back up, but as we got to the actual regular session pre-market open, uh, things began to show some weakness, and that's when we faded back and filled in into those, and that's when we really saw just a lot of back and forth action, and we were pretty much maintained even through a lot of it, and there just weren't enough buyers at this particular stage because you lost your short covers, and once they had pretty much faded out, then it became just algorithms taking advantage of various weaknesses, and that's what really led to the back and forth, and then literally more of a breakdown because that MBI white. You can see this whole series right here, literally starting from this peak here. We kept having a series of MBI white peaking over, and you know you're in trouble when you get the magenta getting up above that 40 level, and then it fades below and you're only at the 23%. You know you're going back to the zero. One of the best scenarios you can look for is that anemic kind of push when that MBI comes up and it's not able to do anything. It did build off that briefly by not continuing its break below yellow, and led to a soft bid, really. Is all that was towards the end. Then we just had selling going through, and you can see that's continued to this point right now in the post market, and that's currently where we sit. So you can see that there's going to just be this continued back and forth. So people are looking for longer swing trades, and that kind of situation is going to be a bit tough if you're not willing to experience the broad moves back and forth. Fine, it's easy to say that we're in that broader short, but you saw how significant that uprun uh, can be, and no reason to suffer that kind of drama. In my view, that's one of those reasons why I think it's so important to look at that daily, the 50K and then 5K chart here. Really gives you the ability to see those momentum shifts. And in this particular case, when we knew we were in that middle soft and the 50K was weak, it made for a lot of easy trades, in my view, from these standpoints, and the paint bar captured it beautifully. So just continue to do that. Follow what the paint tells you to do. And that keeps it about as simple as you can get. As always, I'll continue to update you on the Skype chat and post anything relevant. Trade well. We'll talk to you later.